Okay, so good morning, everybody. Officially, welcome to our training today, where we'll be looking at counter trend line trading. So it's very important to, before we start talking about what we have for today, what exactly are trend lines, and then what is counter trend lines. So kind of explain that, I'm going to pull up a slide to let us use a whiteboard, more or less. So I'm going to share that. So let's just use this. Okay, now, so the forex market, as we know, is a market that moves in waves, right? So the market doesn't move in a straight line. When price is trying to go from a point A, let's say, to point B, it's very unlikely you see price move, in a straight line like this. So what tends to happen, what we tend to get is we tend to see price move in wave-like patterns. Now, these wave-like patterns is what you find in the market. So the market is more like a snowflake effect, right? So, snowflakes, the concept of it is, a snowflake is made up of snowflakes, and that snowflake is made up of snowflakes. So snowflakes, so the tiniest bits of, snowflake you can get. And so it's the same thing with the market. The market is made up of cycles, of waves, and that wave, when you zoom into, let's say you zoom into this area, that area itself is made up of waves, and so it's just the way the markets work. Whether you're looking at the market from a 1 minute time frame, you're looking at the market from a 4-hour time frame, or a daily chart, or even a monthly chart, the market will still look constructive. It will still look wave-like. There's no time you see the market just maybe like this or like this, and let's say in a particular time frame. The market is always moving. Now, because of this fact, because of this knowledge, well, it then defines what we call the uptrend, the downtrend, the sideways trend, and all of those fancy things. However you want to call it, bullish, bearish, or ranging. So we then, trend line basically is just trading. It's just the lines that we try to draw to figure out areas of support or resistance in the market that kind of shows the direction of price. So for example, you can see this illustration here on our screen. Well, the movement of this is, upward, right? The movement of this is upward. And so for this is what we'll consider a bullish market, right? An uptrend, so a bullish market or an uptrend, because, well, you can see the market is going up. So for a bullish market, well, we call it an uptrend. And then when we're drawing trend lines, the trend lines, more or less try to connect low prices, supports, potential areas where price tends to respect, right? So in this particular area here, our trend line will be below, showing us that price is appreciating. However, if the market breaks below the structure and starts going down, well, this time the trend line would show that price is dropping, right? So irrespective of where price is, well, the market is, irrespective of where direction price is going, well, the market would always trend somewhere. Now, with trend line, we use it to try and figure out potential buy opportunities or potential sell opportunities. So for example, in a bullish market, we are told to be looking for buying opportunities, while in a bearish market, we are looking for selling opportunities. So in a bullish market, the low prices are good places to buy, while in the bearish markets, the high prices are, good place to sell from, right? So with that in mind, then, what exactly is counter trend line trading? Now, let me clean all of this. Now, if this is the trend, price is making higher highs and higher lows, which is what we call a bullish market, right? So this market is bullish, well, because constructively, the trend is up, right? So this is the trend. So let's assuming that, let's say this goes down normally, right? So if this is the trend, then we can see that the market is trending higher, maybe even bounce up again. And then, we're seeing price come down low. Now, the overall trend is upward, not so. However, in the midst of this uptrend, you could see, like, for example, in this area, you could see that the price was downward, right? Same thing here, same thing here, right? So in the midst of this overall trend, right, there are several counter trend lines. 1, 2, three, not trend lines, but several counter trends. So it's counter because it's kind of like the opposite of the trend. The major trend is bullish. However, you could see that these various sections that I just highlighted here, you know, the market was moving counter the trend. The overall trend is bullish, but this area here, the market was counter the trend. Same thing here and same thing where we currently are. So the market is moving counter the trend. And so this now breeds, so even within this structure, just like the snowflake effect, you could find, let's say even on a lower time frame or even on the same time frame, you could find a trend, you know, a smaller trend where, okay, so this is what it will actually look like. So the going down of the markets would also be in waves, you know, as it's coming down. So you can still have a trend line drawn like this, you know, that is counter the overall structure of the trend. So now the reason we looked for counter trend line, the reason counter trend line trading is also one of quite powerful, something I use for confirmation. So I like to see market break away from a trend. And you know, when I see markets resuming a trend or breaking into a new trend, I want to see trend lines being broken, right? Now, so what that means then is, even though this overall trend is bullish, well, I'm looking for buying opportunities, right? Because there's nothing saying the market has to form a perfect trend line. So this, our hypothetical example here, you know, the market is respecting this trend line. There's really nothing saying the market has to respect this trend line. The market could actually blow past the trend line, still stay bullish because, well, it's making higher highs and, you know, continue going upward, right? So if you were looking at just this trend line, the market doesn't have to respect the same trend line every single time. But however, we can see, as long as the structure, so in this case, the structure is, well, the price is still staying, making higher highs and higher lows, we can still be looking for confirmation if we get a break of the trend line. Because here is the thing, when we break the trend line, you know, we're now probably very likely going to resume the overall predominant trend, right? So quickly, I hope you understand the concept of what I just tried to explain with this, my gibberish explanation or drawing on my chart here. But the basic, the fundamental lesson here is, well, the market is always trending. So it's, you know, if this is a daily chart and this is an uptrend, however, we are currently here today, this whole move here on a, let's say, 30 minutes or a 1 hour chart could look like this. So on a 30 minutes chart, the market, well, is in a downtrend, right? So irrespective of the trend, irrespective of the direction price is moving, depending on how you're looking at it, something is trending. So now we're looking, counter trendline trading is we're trying to figure out, we're trying to continue the direction of the predominant trend, right? So the predominant trend can be depending on you. So if you are a day trader, right? So you trade the 15-minute charts and the 30-minute chart or something like that. Maybe your predominant trend is on the 4-hour chart or the daily chart. You know, if you're a scalper, you're looking for predominant trend on, let's say, the 1-hour charts, and then you're trying to trade the 5-minute chart or the 15-minute chart, however that is. And if you're a swing trader, you're probably looking at the daily or the weekly charts, and then that's your predominant trend, and then you're trying to follow the predominant trend on those higher time frames. However, you're looking for confirmations or stuff like that on a smaller time frame. Even within the same time frame, you could also find counter trend line trading. So the idea is, well, if the major trend is upward, and the moment, because we know the market will always, if it's going up, would pull back and continue going up, or if it's coming down, will go up and then continue coming down. So those pullbacks in an uptrend offer us best opportunities to buy, and those push up in a downtrend offer us great entries for selling. Now, quickly, I hope you guys get the point. Just quickly tell me a yes. Let me know you understand the basic concept of what we just discussed now. Okay, so now we'll go to the chat and we'll look at examples. We'll look at how we can look out for that, right? So let me share back my screen. So I hope you all understand the concept of trend lines and counter trend lines and how we aim to use it, right? Okay, good, Nathan. Yeah. Okay, now, so back to our charts. Now, the beautiful thing about technical analysis is we don't have to master any single chart. Yeah, some people specialize on trading just a single currency pair or a single asset class, and that is fine. However, I trade a lot of instruments. I believe in diversity. I don't want to have to force trade. Sometimes I don't really like what a particular instrument is doing. And if I trade just one, well, I may have to force trades. So the beautiful thing is the same concept, the same technical analysis concept, whether it's support and resistance, whether it's trend lines or counter trend lines or Y-curve distributions, the same basic principle applies against all currencies, pairs, against all instruments across all time frames. So now we're going to just, we're going to work with a naked chart here. So let's just, let's put up a chart that we can use. So Euro USD is fine, but maybe let's use a more cooperative pair, AUD NZD. Right, so we're going to use this. Okay, let me use a fresh chart. NZD. Okay, so AUD is probably one of my favorite pairs. Now, the whole idea is this, right? For example, in any particular section of this market you pick, maybe you select this region here, for example. If you select this region here, well, the market was trending lower, right? So the market was in the downtrend there. Same thing here. This was also, you can call this entire move, right? You can call this entire move a downtrend. It is a downtrend. However, you can also call this brief move here a brief uptrend, and this is a downtrend. So it just all depends on the time frame you're looking at, right? So now let's assume what day traders, right? What day traders will look out for opportunities in the market. We try to trade the market, look for day trading opportunities to get in and out of the trade. Now take for example, let me flip right here. So let's say we've over-identified. So note before I do that, first thing is this. Well, that's not where I wanted to start from. But now, first of all, within this structure here, the market was in an uptrend. Within this area, you could call it an uptrend. Within this area, you could call it an uptrend. Same thing here. The market was in a downtrend here. How do we know that? Well, the downtrend started from here, at least based on what we're looking at it here, because you could see price making lower lows and lower highs. So this is a high price. Annotation too. So this is a high price, and then price made a low price. However, the next high price is lower than the previous high price. Sorry, the next high price here is lower than the previous high price. And then the next low price is also lower than the previous low price. So you can see the market continually makes lower lows and lower highs. And as long as this market continues to do this, well, this market is in a downtrend. However, here the market, now this is where the trend changed a bit. So you could see the market made a low price. So we're expecting to see, let's say assuming this market turned around from here, and continue going down, that would have still continued the downtrend. However, see how the market made a high price, and this new high price is higher than the previous high price. And then when it made a low price, this new low is higher than the previous low price. So this is what we mean when we say in an uptrend, the market makes higher highs and higher lows, while in a downtrend, it makes lower highs and lower lows, right? So as long as the market continues to make, from this low price, it ended up going to make a new, high price. So uptrend is still intact. As long as the market does not take out this low price down here, well, there is a strong possibility price would go up. The moment it takes that out, well, you're looking at a potential downtrend. However, this is daily chart, right? So even in between, the snowflake effect I'm talking about, even in between this pullback here, you can see that the market is still trending low to high, low to high. So you find this structure, you find the same fractal nature of the market across all single time frames and all of those things. And then depending on how you choose to trade, you can look for opportunities. You can just take the concept and try to apply it on your trading. So let's try and do that, right? So now let's take this area. Remember, when the market makes this move and this move, right? So when the market pulls back here, we did not know that this was going to be a downtrend. So I want to be, let's be frank. Let me just take this, let's go back. So because it's easy to it's easy to look in hindsight and say we know, right, that the market was going to change trend. However, we didn't. So we're going to try and look at it as in based on the perspective of how we probably have traded it. So let's replay price from this point. Now, let's replay price from this point. Now, if you look at this, well, you would say the market is in an uptrend, and you are correct. The market is in an uptrend. If you understand our trend line trading system, well, there are a couple of trend lines we can draw here. This would be a valid trend line, and that I would probably want to have on my chart. This would be another valid trend line I would also want to have on my chart as well, because if the market breaks out of this, I'm probably expecting it to come to this, and in between those breaks, we'll be looking at changing trend. Now, from this point, well, we're still probably only looking for buying opportunities because, well, the market is bullish. You could have, the same idea here. You could see the market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So the market is still very much bullish. So we don't know it's breaking down yet. But however, when do we start looking for selling opportunities, or when do we start looking to sell? Well, now we're not. We'll be looking probably to see how price reacts from here, maybe how price reacts from here before we start looking for buying opportunities after we find confirmation. However, one thing is sure, well, as price moves, well, price, so now let me reduce the speed a bit. So now notice that price, just exactly, you can see how price reacted from our level of our area of support. In this case, reacted as if he wanted to buy. Maybe some people would have probably looked to buy here and try and take profits for this particular trade fails, which is all fine and good. However, as this fails and the market breaks below this trend line, what happens is, notice the structure, the structural change. Well, price is now making lower lows, right? Price is now making from a high to a low. Then it makes a lower high, and then now makes a lower low. So you can see that now the structure of the market has changed, right? So now what does this bring to mind? Well, we start looking for selling opportunities. Where do we look for those opportunities? Well, we look for those opportunities when the market is going up. We start looking for when the market will continue the predominant trend, because now the predominant trend is lower, bearish, right? So we look for those selling opportunities because we're trying to sell high. So we're trying to figure out a good high price to sell from, and then we look for that around, why the market is pushing back up. So this is where where counter trend line trading comes in. So we might have our predominant trend line up here, right? So we might have our predominant trend line up there. However, that will be the main trend. Counter trend line is where we now start looking for, okay, how do we confirm the move, right? Now, even if the market breaks out of this trend line, it doesn't necessarily mean it is now in an uptrend. To become an uptrend, the moment you start making higher highs and higher lows, right? So I hope you get the point. So it doesn't mean it's now in an uptrend. It will be considered an uptrend if we start seeing price take out this high and then make a new higher low. Now, so let's go forward and see what we would have done. Now, but here at this point here, this is kind of the area we'll be looking to draw our counter trend line. So if you go to the lower time frame, maybe the 4-hour or the 1-hour chart, you'll be able to find structure, something like this, where you'll see price trending higher, making higher lows and higher highs on the 4-hour chart. So let's just box this in so we can zoom into this area, right? So this is the area we are looking at, right? And let's jump down to a lower time frame. So no, that's not it. So this is it here. Let's look at the 1-hour chart, for instance. So the 1-hour chart of that zone, I hope I'll be able to go back that far. Okay. Let's see. Where are you? No, not here. Okay, yeah, this is, I think this should be it here. So this was the area we're looking at. If it's just load up, this was the area that's pushed up on the daily charts. Why is this? Where's the rest of my chart? Oh, I don't know what's going on. Okay, so this is the 4-hour chart of that area. I think this is the 4-hour chart of that area that we were looking out for. So potentially, if I'm not mistaken, you could see, so we could have this trend line here that failed. Okay, so we might have our trend line like this. Now, if you had a trend line like this, now note, even though this trade may look like it failed, you probably should have made profits from it, right? So let's say this was the trend line we're looking at, and then we're waiting to see the breakout of this trend line to continue the downtrend. Now, if we have this breakout, well, this is where the breakout occurred with this candle. So we can look to sell at this close of this candle, and then maybe protect ourselves higher if we're scalping, let's say day trading. Now, if you're trading it on the much higher time frame, you probably have your stop loss much higher and your take profits much lower, right? So you'll still be able to get in on this trade. But notice that we had this trend line break. You could also call this, right? So we also had this counter trend line break, because this is against the predominant trend, which is coming lower. And the moment we broke below, well, you can see how price kind of like fell off the cliff, right? Let me go back to the daily chart so that we don't get a little confused, right? Now, pardon all the lines and all, it's just to show you, to kind of illustrate the stuff to you, right? So notice that, so if we were to replay price, as let's say we replay price from here, for instance, we have this low to high, low to high. You can see the market is still structurally sound, even though we're still in the downtrend. Remember, even though we broke above this supposed trend line, well, we're still in a downtrend because it has not taken out the previous highs, right? We've not still taken out the previous highs. So structurally, we're still in a downtrend. Maybe what it means is, well, our trend line is not accurate. You could just probably adjust it to look something like this. And you have to be, successful trading is not about being opinionated. You want to look at the market, see what the market is showing you, and follow price. Forget about your own personal preference or what you feel the market should do. Look at what price is doing, and then make your decision based on that. So we know we are still in a downtrend as long as we don't take out these highs, right? So if we don't take out these highs, and now we have our trend lines below here, if we're able to break below this trend line, well, then we are looking at a continuation of the predominant trend. And the predominant trend is what? Lower lows and lower highs. So if we take out this, we're going to likely make a low that is lower than this one. So the moment you take this out, you can look to try to sell, protect yourself, and make profit. So based on the concept of Fibonacci, so this is one place where Fibonacci becomes very important. So you could just draw a Fibonacci retracement tool and try and figure out where your exits should be for and stuff like that. Okay, so now let's push forward the price and let's see what happens. So price breaks below here, provides us an entry. You could enter at the 50% retracement. So maybe our trade would look something like this, where we look to go short on the 50% retracement of the candle, or maybe at the open of the candle itself. It doesn't matter. And then our stop loss, might be above this candle, or if you're aggressive, then you can put it above here, right? Naturally, I like to go for at least a 2-to-1. So let's say our stop loss is above this trend line here, and then we're trying to go for twice our risk. Or you could just use the Fibonacci. So Fibonacci would be, you just find the Fib extension to draw A, this would be your A, this would be your B, and this would be your C point, and you look for your D extension. So that will be our trade, and we let it run. Now, another thing, one good thing when it comes to one thing about trading, trade management that will probably make you a lot of profit is being able to collect partial profits. So even though this is where we're trying to aim, we also acknowledge that, well, price could even go much lower. So the moment we hit our primary targets, we could take partial profits and then probably let the rest run. And obviously manage those. So as you can see in this particular example, the market is still goes on to hit our target. We've taken profits. Okay, it hasn't yet. We're still in the trade. Now, obviously, some of you even might have collected partials, but even if you don't, well, the market gives us full TP here. So we get out for a trade for full TP. Now, here's another thing. Remember, I talked about the market being fractal. The market is fractal. That means the market, a kind of snowflake effect. Notice that we were selling because we broke below this trend line. The predominant trend is what? Lower, making lower highs and lower lows. What did the market do here? After making a new low, it made a high that is lower than the previous one. When it took out this low, what did it do? It rallied up again. So even if you took this trade or you didn't take the trade, there's always a new trade to take. Notice now at this particular instance when the market is rallying back up. Well, what do? Well, we go down to the lower time frame as the market is pushing back up. We find a trend line that the market, that if the market breaks, as long as it's still within structure, we look to trade it. And then when we break the trend line, this offers us another trade. So take here, this particular one. So we took that one, we're out to profit. This particular one will also be a sell trade. We broke below the trend line here. Let's see, we closed and we are aggressive. Let's say we put our stop loss above the highs, and let's say we try to make 2 to 1 as well, in the same trade. So they're about there. So another trade still in the card. So this is what I mean. This is, you hear me say a lot of the times, we look for buying opportunities in a bullish market, we look for selling opportunities in a bearish market. Well, this market is bearish, which is why we are looking for selling opportunities. Notice we're not trying to buy here and take profits or buy here and take profits. We're only looking to sell high and take profits, right? Because the structure of the market is bearish. Now we'll continue to look for this kind of opportunity until the structure fails. Now, what would the failure of the structure look like? Well, the failure of the structure would look like when the market takes out this previous high and then makes a new low. Notice now that, well, the structure has changed. Instead of making lower lows, it's now making higher lows and also making higher highs, right? So unless the structure has changed, we still keep looking for, anytime the market pulls back, as long as it has made a new low, pulls back, we could look for a trend line break. Your lesson of price action trading also comes into play here. Very important. Price action candlestick formations would also help you around those counter trend line breaks. So let's see how it continues to go. So the market moves forward. It's still in the basic sense of our overall structure. The market is still moving. So we're probably out of the trade. Maybe you allow some to run. If you don't, well, you don't do nothing here. You wait. You don't do anything here. Now we come into action. So as the market is now moving up, right? So this is where we come into action. We start looking, for trend line. So this trend line, you could look for it on your what do you call it? On a lower time frame, the 4-hour chart, the 1-hour chart, anything of the sort that you're comfortable trading, and it would stay valid, right? As long as the market does not take out the previous structure. So as long as it doesn't, so if sorry, the market goes up and take out this high, well, that negates our bearish outlook. So what I'll probably want to do is, remove this trend line, because I'll probably expect the market to come down a little, make a low price and continue going up. So maybe I'll start looking for that counter trend line trading. So in this particular instance, well, we keep waiting for the trend line. Even if the market fails to break, like let's say the market breaks this trend line, and continue going up, as long as it doesn't take out this high, it is still structurally in place. So what that means is maybe you could take a trade here, maybe it breaks down, you take a trade, it hits your stop loss, and that is why the most what I call it safer place to place your stop loss is above the previous structure. So you could see, because the negation of the entire trade would be above the structure. The only problem with that is, well, if you're doing that, sometimes your stop loss will be too wide and your risk to reward won't be that great anymore. Okay, so We're moving with price, we're waiting to see how the market, if and when it breaks the trend line, or does it change structure? So it's going up, it's still going up. It hasn't taken out the structure, has it? No, it hasn't, but it has broken our trend line, right? So let's look at this. I don't want to just pick and choose. So let's say this is our trend line. This is where the market break below the trend line. And then we have several weak candlestick weak rejection. So we'll probably be looking at this. This is a sign of continual bearish movement, because you can see here. So you can see here that price has still maintained it's maintained lower. It has still maintained the previous bearish structure, because this was the previous high. It hasn't taken that out yet. So from this particular case here, sure, probably look to sell from here. We'll also be looking to sell. Let's say from this candle where the market closed here, we sell from this candle. We place our stop loss. In this case, you could place your stop loss above the highs. Conservatively, you could place your stop loss, let's say 20 to 15 pips above the structure here, and then just try and target 2 to 1, or you target the previous low, whichever one you're good. So 2 to 1 is what I advise, and once that is hit, you could take partial profits and let the other one run. So you could have two trades. Your trades could be something like this, where it is a 2 to 1. Sure. However, you also take partial profits and let the other one run to next level. And obviously, once you hit partial profits here, you want to adjust your stop loss to break even or better. So now the trades might go on to hit a loss, which is fine. As long as the market stays below, maintains this structure, we probably adjust our trend line and look for another entry, right? So let's say hypothetically, the market breaks up, takes us out, right? So let's say the market does this. From here, let's say the market goes up, takes us out for our stop loss, but it doesn't take out this high. So the structure is still bearish and then comes down. So at this case here, our trend line would look like this, right? Our trend line would then look like this. And then when we get the break, we probably look to trade and do the same thing, right? This is the reason why having a good risk to reward ratio is very important, because you will lose some trades, but if you have a favorable risk to reward ratios, even if you have a 60, 40, 40% win rate, you will still come out on the top if you stick to the rules. So let's see how that goes. Let's see which of the trades plays out and how the market moves. Okay, so the market continues. It doesn't take us out yet. We get taken out. And so here's the thing. Now we get taken out here for a loss, right? What do we do? Are we still looking for selling opportunities? Well, not really. We aren't looking for selling opportunities. And why is that? Can anybody tell me why we're not looking for selling opportunities quickly on the chat? Why we are not really looking for selling opportunities? Yeah, the market could go down and all, but why has the trend changed? Or it hasn't really changed though, but potentially, why has the trend appears to have changed? Anybody? While I'm waiting for your answers, so I'm going to just take out this trend line because, well, okay, so yes, Chinedu says the previous high has been taken out. So you could see, thank you very much. You can see how the previous high has been taken out, and in a downtrend, we don't want to see this happening. We want to see lower highs and lower lows. Now we now have a higher high, so potentially we could come down, but if we don't take out this low, then we have changed trend, right? So let's see what happens. The market, if it continues to go up, clearly takes out the high, and then comes down. So this at this point here, right? So somebody could look at this. Well, Mr. Obina, you said, so I can also see a trend line here that has been taken out. So yes, the trend line like this, you could have this, and it has been taken out. Maybe you could look to sell this from here. Yeah, you can make some profits depending on where you're targeting, obviously. But to me, the structure itself has changed. The reason is, well, look at this. We've taken out previous high. We know that the market is not just going to fly off the face of the earth. It is going to, move in the same fractal nature, highs, lows, highs, lows. So potentially this low could this movement down could just be that the market wants to form a new higher low before going up. So unless the market comes back and takes out this low price here, we are now looking at an uptrend potentially. So instead of looking to sell this, because the reason, you could sell this and make some profits. But the reason I probably wouldn't sell it is there's no way, I can't really tell if the market will stop here and go up, or maybe come down a little bit before going up, or maybe even come down much. So I want to see the market, make its decision and then follow the market, because it could simply go up from here or come down lower and go up. So I don't want a situation where, let's say I start selling from here, the market comes down here and continues the movement up, and I'm left sitting on the drawdown. So let's see the market continues to go down. What we're looking out for is, well, is the market going to take out this low and make a new low? Else, is it going to do a turnaround? So now at this point, because we are looking, while we're looking at this, we've identified potentially we could be looking at a change in trend because we've taken out previous highs. So what this means is we'll be looking for counter trend lines, because now the predominant trend, which hasn't materialized yet, is looking likely to be bullish. So we can, in this kind of situations, you probably want to keep your risk low, use a smaller lot size. So as the market is going down, just make a trend, find a trend line that sticks and make that happen. So if we break the trend line, then you could be looking to see the price push higher, right? So in this case, because this is potentially the beginning of the trend, right? What I mean is we are looking at a potential uptrend because we've taken out this high. However, there's no guarantee that price would not take out this low and continue going lower. So we don't know whether it will stop here, or maybe it will stop here, go up, come back down before going up. So if I'm going to take this trade, well, I'm going to be keeping my my lot size, really small, because I really cannot tell exactly what the trend is now. But because of this counter trend line trade, and because I'm looking to buy more than because of the structure, well, what we'll be doing here is we'll be buying, we'll look for long positions after the break of the candle, which is here. Keep our stop loss, just below the structure here, and then try and take out 1:2, right? So 1:2. Now, I say 1:2, 1:2. However, if price comes up to this area, I'll definitely be protecting some of my profits, because price will just come here, make a double bottom, double top, and fall back down. So even though I'm looking at the 1:2, if I've seen price move in my direction quite enough, at least I would protect myself by moving my stop loss to break even, so I don't see a losing position turn into a negative. So now we let that happen, and we see what the market does. The market, in this case, is cooperating with us. It's heading higher, and it gets to the level of potential previous resistance and is reacting, but it keeps pushing higher. Right now, it's coming lower. So this is obviously trade management. It's entirely up to you, but we are still in the trade, right? Now, look at this. Let me post this here. This market here is ranging more or less, because it hasn't making a new, it has not made a new high. However, it's making a higher low. So assuming it has made a new high, right, then we'll probably be looking for a counter trend line to trade from here. But because it hasn't made a new high, I definitely wouldn't be looking for a counter trend to try and trade this. So we'll still stick to our previous trade and see if if this. So personally, for me, I probably would have been out of this trade, because so once we are up to this highs here, is either I close partial profits or just adjust my stop loss to break even or better, right? But let's assume we left it. So we'll see what price does. It seems it's going our way. It's not, but price is moving, and I'm sure everybody should have taken profit. I doubt if anybody took this trade because of this, but for this particular purpose, I would have stayed all the way to here with full position. At some point within here, you probably would have taken partial profits, but fine and good. For example, the price made its way to our targets and we collected full profit. Now, in collecting full profit, we did something. Can anybody identify what we just did? Well, we took out the previous high, we've made a new higher low, and the structure is looking bullish. Now, there's no guarantee that price will continue to go higher, but what this means is, well, I'm now going to be looking for, if the market is pulling back down, I'll be looking for opportunities to buy it, because potentially we could see price continue to go up. So we'll look to see when and if the market does make that. Okay, so it seems we're starting to make the pullback, and this is where I'll be looking for a trend line. Now, when it comes to trend line, when I'm looking for trend lines, I don't really like trend lines that are looking too steep. So what I mean is, when the trend line is looking like this, it's almost vertical, or maybe looking, like this, where it's, almost, it's just too steep. Those kind of trend line appears to get broken a lot. So if trend line is looking like this, or like the other example, it's very likely you see those broken, and the market would even continue the direction you thought it was going. So in this case, maybe we could have a trend line. But at this point, I probably wouldn't, except maybe on the lower time frame. On the lower time frame, yes, we could probably find a good trend line with a good angle. But now, so at this point, this is where I would probably have something like this. So I'll probably have something like this, because, well, we've made an angle that seems appealing, right? And so what we'll see is, let's assume we were to take this trade. If we took this trade, we'll be buying from here and would have made a loss, right? Which is fine. So would have been buying because, well, we seem to have broken the trend line, and we'll be looking to try and take this maybe 2 to 1 or something like that, and that would have been a loss. However, the structure has not changed until the market takes out, well, this low, not this one, until the market takes out this low, or even if it takes out this one and makes a lower high, it will show that the structure has changed. So what I'll do is I'll probably adjust my trend line to, now look like this, right? And then what then happens is, as price is moving, we'll see what happens if you respect it, if it gives us a trade to take, and how we potentially might have traded that, right? In this case, no trade yet, because no trend line broken. And are we going to get? No, we're not getting any trend line break. Now notice too that even within the structure, it's making cycles that a day trader would have been able to look for trading opportunities, like on the 30 minutes or the 15 minutes chart. You would have seen several, so this would have been a bearish market for a day trader on the 2 hours or the 1 hour chart. However, we're looking at the markets from the point of a daily chart. So all of this is still one swing for us, right? Now the market broke above quite nonchalantly, and then so let's still assume we take this trade, although there are several reasons why I probably wouldn't have, because I don't like this big long rejection. And so, but let's just assume we did, and we look for a 2 to 1. So we'll keep our stop loss below the low. We'll try and take profits at a 2 to 1 risk to reward ratio. So at least, okay, so that's about 2 to 1. We'll see what happens. I think this one will get taken out. So price is moving, and we wait, and let's see, do we get stopped out? So the market is just ranging, and we get stopped out, right? So so we get stopped out for this trade. Several opportunities to probably get out of it if you were not really, because this is, you see how the market ranged a lot from here, some accumulation and redistribution. So several opportunities you'd have been able to get out, but let's assume we didn't, so that was also a loss. However, the structure hasn't changed itself. The structure of the market hasn't really changed. It will change if we break below here. So it means our new trend line would look something like this, right? And now, when it comes to trading, risk management and your risk to reward win is what will keep you in the game, because you see how we probably lost about 2 trades in between. However, one trade win will probably cover that. So this would be a trade that you could, okay, trend line break. You're looking for a potential continuation of the trend. However, it's too far, because if you were buying from here, where would you place your stop loss? Well, maybe you could place below here, or aggressive conservatively, you want to keep it here. This is too far. But if you're keeping it tight, so you probably, let's say, enter after the break here, you keep your stop loss, let's say, below here because of this structure here, and we try to make a 1:2 on our gains. So our first target is 2 to 1. and then we'll let the remaining run at least up to here. So we'll at least take partial profits, and let the rest run to the top. So let's see what happens in this case. Market is ranging, and we get stopped out. No, we haven't. Okay, and we get stopped out, right? So now obviously you're going to have to, when it comes to deciding trades you take, all trades are not born equal, right? There are several reasons, like I mentioned, why I probably wouldn't have taken this trade, because while the market has gone up by a lot, it is at a level of potential resistance, a lot of resistance around here. So probably stay out of that one for that particular reason, and which is actually part of the reason you'll probably not be looking to buy, more or less. As a matter of fact, because price took out, price has taken out this previous low with this low here, we could actually have moved on from this downtrend, because price had from this uptrend, probably looking for a break. So instead of that trade, we could have been looking for this break of this trend line lower. I hope you get that, right? Because, well, market has taken out this low, right? And you could see that, well, resultantly the market it's actually appearing to make lower lows and lower highs. You just need to look left on your chart. And so this push back up, we could potentially have drawn a trend line and wait for the break of it, and definitely in this particular one would have made profits, but I don't want to just pick and choose. You get the idea. The concept is applied on every single time frame, every single currency pair or instrument. So now the market has, it seems to be undecided. So it has taken out previous lows. You can see it has taken out previous low just about. And so between market, we could be looking at a new bearish market, or the market will continue to go higher. However, there are several opportunities for counter trend line trading. So if you had, this would have been a counter trend line. This would have been a counter trend line. You wait for the break, it breaks, you trade. This would have been a counter trend line. You wait for the break, it breaks, you trade. Obviously, we're looking at the structure of the market to try and follow price in that direction. But basically, when we find the predominant trend, this concept works mostly when the trend is when the market trend is clear. So when the market has a clear trend and is moving, then we now start looking for those counter trend line breaks and try to trade price as they wants to continue the predominant trend. Okay, so that would be all from me for today. I'm sure, I guess some people might have questions. Feel free to let me know about that. And yeah, so we have a couple of minutes to take your questions. And yeah, anybody who has something you want to ask, just quickly ask. I'll be stopping the recording now. The rest would be on YouTube.